record this. All right, so I just have some time, so I figured we could knock off a couple convos before I get back. Do you guys use TradingView or MT4?
I use TradingView personally.
All right, let's hop on TradingView. All right. Put this back to the top. All right. I'm gonna go through the NAS trade because I'm not sure if he joined.
The nasty NAS. Nice.
Right. There was a guy that was asking about why I look at NAS. Is he here? I'm not sure if he's here. I don't know his name. I just know his Telegram handle. We were in the discussion chat and he was asking why didn't I look at something else on us. So I'm gonna start everything here on a NAS daily chart and do everything brand new. So if you have been in the channel for some time, then you'll automatically know why I had a certain guys. Can you?
I can't hear. I think.
All right, so I muted everyone. You guys should be able to hear now. So if you've been in the channel for some time, you would have known when we were buying NAS, going for that 1,500 mark, 15,000 mark. And when we got there, you would have seen that post where, I mentioned that 1,300 or 13,000s again before we see all-time highs. And we've been watching all of this play out from the imbalances to where we wanted to see that stop point. So this box here is that box where I mentioned I wanted to see the stop point, but I also mentioned I wanted to see a Tuesday low of the week. All right, should be able to hear me now for the persons who just said they can't. So I was anticipating a Tuesday low of the week, and then I run higher. Unfortunately, we got the Tuesday being very aggressive. So because of that, because of how the day started, I initially wanted to see lower prices on NAS, but NAS and gold typically do not move in the same direction. They're hedges for each other. So investors who buy one, sell the other, etc. I don't know everything around that, but that's how I learned it. Whenever persons are putting money in NAS, they do the opposite on gold. All right. So with that in mind, NAS gold started a sell-off, which was decoupling from the dollar, because if you've been watching gold and the dollar, they've both been moving higher. And I've been calling gold to 2,000s for some time now. Today though, dollar was moving higher after it rebalanced, but then gold did not stop there. It started to move lower aggressively. So that's when I said that we wanted to see lower price on gold, bearish gold for the next 2 hours. And because of that, NAS should go higher. So we're going to frame out an idea for what makes NAS, or what I saw on the charts and why I thought NAS was bearish. Most of what I do on an hourly chart. So I'm going to go to hourly chart. That's the imbalance there. And initially, I think this was the high that I was looking for NAS to take. That was that first high. That's the range I outlined. Now, if you look at this and you're trying to frame the trading range, we'd be looking for what's the highest closing up candle and what's the lowest closing down candle inside this price action. Guys are just joining, just kind of mute. So we have here.
This one? Yeah.
Somebody's not muted. I don't know who's who. So I'll just do that. There we go. All right, cool. So inside this bit of price action right here, we have all these consecutive up close candles. So this right here is what I'd be looking at for like an order block, because all of these candles are here. And then for my bullish order block, it would have been this one. This candle has the lowest closing price and all of this. So your trading range becomes this. I don't care about this part up here, really don't care about this part down here. Inside here is where my opportunities should arise. So just doing quick math, that's about 400 points, around 400 points on NAS. This is all I need going into a lower time frame to frame where I want to see my setup form. If you're going to be picky to be for precision purposes, then you can go ahead and you frame out all the imbalances. It's there, that's still open. This is a gap right here, that's still open. Right there. This is another bullish order block. Then there's really nothing else inside here that you should, in my opinion, pay attention to, because the narrative is already clear. Gold is going low fast. I want NAS to mirror that move and go higher fast. Where is NAS potentially drawing to? If it's still trading inside this range, then rebalance of the inefficiencies inside this range is what it should likely do. There's no reason to go higher above this, because nothing here is inefficiently traded. There's no imbalances above this. If we go above this, the fact that there's no volume inside these wicks, I'd be looking for higher prices. But personally, I want to see NAS lower until maybe about May, before we start seeing real bullish prices. That's what I want. So that's the trading range. This is absolute best case scenario objectives, because that's the highest imbalance. But inside here on a lower time frame, this is all you need to frame your trade. So whatever time frame you look at for entries, that's what you go to next. This time frame here is like my analysis time frame. So once I get my analysis here, I don't consider myself wrong, even if I take a trade and I get stopped out. I don't consider myself wrong unless my analysis time frame is invalidated. So once I'm using this order block and I get an entry here, it doesn't matter if I try buying here again and I get stopped out. As long as we're not closing below this order block, then my analysis is still valid. So from here, you need to pick a time frame, or you need to pick at least 2 time frames in your trading. Minimum 2, 3 if you're crazy. 1 time frame is where you strictly do analysis on, analysis only. If you're long-term trading, you can probably enter there as well, but you need 1 time frame that keeps you in check where order flow is concerned. And they need another time frame that you use specifically for entry purposes. Just entry purposes, right? That's all you do. So most persons use a 5-minute chart. So I'm gonna hop to a 5-minute chart. And let's make this chart pretty again. So this is that first order block. And then this is that higher one. Let's factor in time now and put the start of the trading day here. That's it. That's no more. Cool, cool. So that's all we need to look at. Previous day's high. Let's put that in just for completeness sake. I'm gonna use a blue line. That. So that's previous day's high. Cool. I don't need anything else besides that. So now we're looking for reasons to go long. Now I don't trade anything inside here, so I'm gonna mark at 7 a.m. price, which is right here. So this is New York opening price. So at New York open, we don't know what any of this price action is going to look like. We believe that price is going to be drawn to previous date highs and potentially higher. We have our bullish arrays in discount that we want to focus on. So once you have that, most of your trade plan is completed, right? You're bullish. So if you're bullish, there's two things you should really be looking for: a sell side liquidity run to pair your orders, or a discount array to buy from. Everything else is really just noise, in my opinion. Everything I say is my opinion. I'm not a financial advisor. Cool. Let's make that clear. So right here, if you're right here in time at that blue line and you're looking for two specific things: sell side liquidity to pair your orders with, and bullish arrays to buy from, you have to look back because you don't know any of this price action yet. So for completeness sake, let's push all of this to the side. Let's stretch the chart a little bit so it becomes a little bit more clear. There we go. So this is the information that we have available to us. In order to frame your premium versus discount, we need a fib, unless you can eyeball it. So that's premium versus discount. Don't want too many lines. I'm gonna have one more line here, that blue line. So that blue line is 50% of our trading range. The next thing you want to look at now, where price action is concerned, because you already have your plan. Your plan is you're bullish. You want to see price trade higher. These are your potential targets. We're opening in discount, so there's no reason to anticipate a Judas. We're already in discount. So you're looking for your sell side liquidity and your bullish arrays. This is where we are. In this price action, you can also look at the efficient versus inefficiently traded portions. What? Premium group? Premium what? Discount and premium range, my G. High to low 50% premium discount. Anyway, so you're looking for your sell side liquidity and you're looking for your bullish arrays. If I'm looking for bullish arrays, I'm always looking for the lowest closing down candle. So I'll go to the down candles. Which of them has the lowest closing price? Either this or this. I want to pick this one. I think they're both the same, but I'm just picking that one. Right? Cool. So here's my bullish order block. If this is my bullish order block, sell side liquidity has to be below my bullish order block. Right? We're bullish. This is your discount array. Sell side liquidity is below here. Does that mean if price trade down here, I'm no longer going to be bullish? I'm going to start selling? Of course not. Yeah, I'll put it on YouTube, sure. Why I'm not afraid of price going below there is because my model, the one I shared, there's that range of price. There's that sell side liquidity run. Price breaks higher. Traces the imbalances, move higher. This is my model. So I'm not afraid to see price go lower here. If price goes below here, then I'm a little bit more comfortable because I can now anticipate what I want to see next. It takes here. I want to see trade higher to break market structure or confirm that price is bullish. Bam. There we go. So that's what I want to see, and I'm perfectly fine with that. There's also an order block a little bit below my position. So price going here to sweep liquidity below this, below London low, that shouldn't rattle you. If you enter here and you get stopped out, the risk management comes in. If you have 5% max daily loss, you shouldn't put 5% on. You should allow yourself at least maybe 2 trades. That's not financial advice again. It's just opinion of a guy who trades, tries to. Anyway, clear up that. Let's move forward. All right, cool. So now we're looking at that. So we have the sell side liquidity resting here. We have that lowest closing down candle here. That gives you an area that you want to see your entry form. Now listen carefully to what I just said. That line gives you an area where you want to see your entry form. If you have an entry model that you use, you look for your entry model right there. Don't just buy when it comes to the level. That's what gambling is. No, I'm not. I'm nowhere near market maker status. So here we are. We're already anticipating price to trade lower. We open here. We're already in discount. We're just waiting for an entry model. Let's say you saw this order block, trades higher, comes back in and you bought this. That gave you a nice run up to here. That's enough for a trade. All right. This is a rules-based trade. That's not gambling. You could see the order block formed before New York. We traded down to it. You got it. Is it luck? Probably luck, because this is not according to your rules. Your rules are higher time frame order block, which is the hourly candle, is right here or below here. Between these two lines, that's an area that you could enter. Where do you consider yourself wrong? If price is closing below your hourly order block. So here we are. Let's say price gave you that run, 20 points. I don't know, is that 20? 40 points, and you didn't take it because for whatever reason, you're now hopeful. You are cheating yourself if you do that, because your original trade plan says that price should trade down here to give you your entry, but you got an early entry. You went FOMO, price rewards you for being FOMO. You lose all your discipline. And I'm not talking down to you. Hopefully you don't think that, because you know we've all made that mistake. I've made that mistake too. So we have an early entry before you plan to get in, and it moves good in your favor. This is where you aggressively either trail your stop or aggressively take partials. If you hold on to a trade like this that doesn't fit your rules, even though you're winning, you're allowing your emotions to get the better of you. You're allowing winning to decide your strategy. And that's a losing strategy. So anyway, we have that hourly order block inside here. I don't remember what this gap was for, probably an imbalance. Price trades above, relatively equal lows right here, above your order block. Perfect. This is like free money, because persons chasing the move now are going to FOMO in here. So you want to see them take them out, give you your entry at the order block, then it's fine, off to the races. So I think we were somewhere in here when I sent the first chart, and I said that it wasn't setting up yet. The entry, there's no clear entry yet for NAS, so we're waiting. That's because we're already up here, and I'm not going to do this because I saw this. So the line on my chart is this candle right here. That's that order block. Trades down, tags it, give a nice little run, then it comes down and tag it again. Then there's a huge down candle. I don't like seeing huge down candles, but in this case, it was okay. So when price creates this huge candle and closes above it right there, this is now overlapping confluence. We've already traded down here. We've already shown willingness to go above this down candle. It's now coming back to an imbalance to rebalance. I'd buy this. So this trade idea that gives you a stop of about 50 points. Does that mean don't take the trade? No, it means manage the risk. So you either put your stop at 50% of this candle, put it at this low, or you cut your lot size in the event that price goes all the way down here and stop you out. Get that first run on buy side right here. We close above. When this closes above, I'll tell you something here now. Whenever price closes above a liquidity pool and there's an imbalance at that high, that creates context for resistance broken become support. Vice versa for if you're bearish. Why? Simple. Because whenever price moves, it must rebalance and then continue. So if the area to be rebalanced is already at the high, why should they go lower? Absolutely no reason. You're just going to rebalance that high in the imbalance and then move higher. Then we have that run. This area was that inefficiency that we took from the hourly chart. We can already see how price is trading here. Does that mean that because this green candle closed above, I'm going to say continue buying? No, my analysis is not taken from this chart. My analysis is from the hourly chart. So closing above the candle, the gap on the hourly chart, tells me that we're moving higher, but I already don't see any reason for them to go higher. So whether they set up another run in the PM session to trade lower or not, it really doesn't matter to me, because that's the end of my trade. There's nothing more I don't want to squeeze out of this move. So now 1 minute for the precision. Precision, folks. So this line is already your 5-minute order block, right? Have that push, all that good stuff. This is giving trend line liquidity because it's all like that, which is probably why this did this. And for the persons who trade trend line liquidity, I don't know who said this or where I got it from, but it's always fun to look at the low in the middle whenever there's like multiple touches of a trend line thingamajiggy here. When you aim for the middle one, it's usually a really good trade idea. So with that in mind, if I, in hindsight, pull this order block because it overlaps with this low here, so we have liquidity inside the order block. If you pull that over, that gives you this really, really good trade idea, which is what you can, I guess, blend if you'd like. Now, this is perfect. This is how I like to see my model form. I like to see them sweep right here and then all that good stuff here. But that's the main reason why I was calling for NAS higher, or why I thought, not use those strong words. The main reasons why I thought NAS was going to trade higher, because all of that confluence was pointing to bullish entries forming in this area, plus the obvious liquidity draw. So let's zoom in on that area here. Zooming in just for one purpose and one purpose only. So earlier I was saying, when we have a high and imbalance at the high, it sets the stage for resistance broken become support. Right here, that blue line is the previous day's high. We trade up to the previous day high, gap down, gap up. These gaps are all you need to frame resistance broken become support ideas. So let me move this for a second, get into that good old opening price of this green candle is 1.140519. That's the high of the imbalance. This candle trades down and goes inside the low, which is 14015.3, which means it trades a little bit below this low, which is enough for a rebalance. Rebalance does not mean completely filling in the imbalance. It means retracing to the imbalance and then moving away from it. Somebody the question. No, there won't be any signals, bro. What? Today was just because I don't remember the guy's name, but yeah, I don't have time to do a signals thing. So yeah, this is something you could start looking for in charts. Whenever there's an imbalance created at a high, then we break it. Watch how we trade at that imbalance, because that's important. If it trades below that imbalance, then obviously we're going to get a deeper run, or price is going to completely be bearish, and that's going to be a turtle swoop. If it fails to close below the imbalance, which is always what you want, it's good. If it completely fails in the imbalance, that's also fine, because price is not closing below that imbalance, and that's good. So you can pick any chart, find a range, find imbalances created, and watch how price trades when it's coming back down to those imbalances. I think EU as one, and then we'll wrap up this video. Where's that come? 5-minute chart. So maximize. And where's that thing? Oh, good. Here. All right, let's look at EU range for imbalances after that were formed when a high was taken. So this is the first high I'm seeing right here. Let's zoom in. So there's a high right there. Imbalance at the high. Right there. We didn't close below this imbalance, so that sets up a run higher. Does that mean buy the imbalance? Well, if you can manage the risk, sure. A better idea is to wait for a valid order block to be created. Valid order block is one that creates a push that breaks structure. So on this time frame, this TBT time frame, we have this down candle right here that creates that swing that pushes higher and breaks the high. This is the high that's broken right there. And this is the imbalance at the high. Not closing below the imbalance, are we? So you could buy that order block inside here. So the first push doesn't break, goes above the order block. When it comes back down, I'd be willing to put money on this trade right here with my stop below the order block, of course. Then you could do your RR or whatever, or look for the obvious areas that EU is being drawn to. Since we're on EU, let's see what's in the chat. So this guy. Actually, don't trade US 30 a lot, but we could start looking at it some more. Let's go. What was the reason for EU? I think I did it on an hourly chart. Damn. So real quickly, I think this is what I sent in the group last night. Admit folks coming in, 1 sec. So we have the high of the range right here, and the low of the range right here. Looking at the range like this encapsulate the bulk of the volume and the bodies right there. So naturally your 50% is coming in somewhere in here, etc., good stuff. But then everything above here, specifically here, so this is where I leave some breadcrumbs for the guys who actually study stuff like that when I say. Above here is efficiently traded. All of this price action is efficiently traded. Above that, we have liquidity and the imbalance resting up here. So inside this portion of price action will give you everything you need for a trade idea. First thing, highest closing up candle is this one right here. Tag that opening price right there. That's my trading range between here and here. Now let's drop to a 5-minute chart. Once I have my trading range, I really don't need anything else. And you could start segmenting the days, find your opening prices, etc., etc. So lowest closing down candle. Just gonna refine this to here. That's about a 30 pip range there, about I'd like to say. Not sure. You could always check if you want. Now, all of this right here is your trade idea. Price is, well, your trading range, sorry. Price trades up, creates all that good stuff, efficiently traded, liquidity above that high. That line right there is liquidity. Now let me show you a very nice signature that forms a lot of times. I don't see it. Oops. So what I was going to show you is whenever you have a level like this that's holding liquidity, price will generally do something like this. Can't find an example, but I guess next time I see it, I'll send a picture where it trades up, creates a high right there, then it stalls, then it runs it, then it comes back down. That's what you want to see to frame your trade. You want to see them create the high, real high, then they stop on it, then they come back down, and then that frames your trade. So using that idea, if you have this as a high, price trades up to the high, that's a stop on. This, only if Surya is on the call, or Chadi. If Surya or Chadi is on the call, then this candle, Chadi, in the words of our good friend Surya, does not exist. That's all we'll say about that. So your trade forms there. Ooh, hindsight. But yeah, I wanted to explain the reason for the NAS trade. We did that. So we're gonna end here. Thank you guys for coming out. We'll talk in the chat. Beautiful, beautiful, beautiful. Beautiful idea. But yeah, for the persons who didn't hop on, I'll probably post it on YouTube. Enjoy the rest of your day, guys. Zoom doesn't want me to end it. Damn. I think every time somebody hop off this thing, there we go.